warahmatullahi wabarakatuh. We are from Group 3. We will explain the initial impact of the COVID-19 pandemic on the global economy and Turkish. Hello, my name is Dian Arahma.
Hi, my name is Nelis Ranisa.
Hi, my name is Shifa Umniati.
Hi, my name is Yuli Rianusari.
Hi, my name is Zahra Sifa Raida.
Global economy because of pandemic China, where the COVID-19 virus originated in, is the most population country with nearly 1.4 billion residents and the world's second biggest economy with a GDP of 13.6 US trillion. China has been fighting the COVID-19 pandemic since December 2019, but this battle devastated China's economy in the first quarter of 2020. China is the crucial country as a source of both demand and supply, and a focus of concern for financial markets for the rest of the world. Hereby, adverse development in China have spillover effect on the other countries. The Organization for Economic Cooperation of Development announced that growth prospect for China has been revised down sharply to below 5% this year after 6.1% in 2019. Accordingly, global economic growth is projected to fall to 4% in 2020 compared to 29% in 2019, but it could fall as low as 1.5% due to the drop in overall global economic activity.
Tourism is a huge global business that accounts for 10.4% of global GDP and 10% of global employment according to the World Travel and Tourist Council. Only Chinese tourists account for around 1/10 of all cross-border visitors, and a huge drop in outbound tourists from China leads to an adverse demand shock in many countries. With the spreading of the virus all around the World Tourist Organization announced that the tourist sector is currently one of the hardest hit by the COVID-19, with impact on both travel supply and demand. On the other hand, China ranked first in goods and services export wide and export value of about $2.7 trillion and second in export wide $2.6 trillion in 2018, according China's production relation wide. Other countries cover a broad speed that cannot be filled quickly. China has a key role in global supply chains as a producer of intermediate goods, particularly in computers, electronics, pharmaceuticals, and transport equipment, and as the primary source of demand, many commodities. General Administration of Custom state that China's overall export and import contrasted by 70.2% and 4% respectively in the first 2 months of 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 2020.
Furthermore, the trading surge in China is harmful to global oil price since China is the world's biggest oil import with 20,000.2 of total crude oil import. Nevertheless, global oil demand has been hit hard by the COVID-19 because of the widespread contraction of China's economy and the drop in demand fuel and gasoline with the travel bans. Meanwhile, the price war between major oil production Saudi Arabia and Russia continue, and they have continuously increased production to overwhelm global oil market with supply. The price of something is determined by the interplay of supply and demand, but two of the world's biggest oil production causes unbalance between demand and supply in the oil market. As a result of this, oil prices lost as much as a third of their value since the 1919 of Gulf War. The International Labour Organization announced that between 5.3 million and 24.7 jobs will be lost because of the economic crisis caused by the COVID-19. And this deterioration in employment also means a large loss of income between $860 billion to $3.44 trillion by the end of 2020 For example, in March 2020, the unemployment rate increased by 0.9% to 4.4% in the United States, and more than 6.6 million Americans have filed unemployment claims since the pandemic began in the United States.
Global stock markets have fallen sharply as investors continue to worry about the broader uncertain economic effect of the pandemic. Net portfolio flows and the value of currencies of emerging economies against the dollar have dropped significantly since the beginning of 2020. To calm markets and encourage spending, central banks in many countries have cut interest rates to make borrowing cheaper and injected liquidity in the financial market to guarantee liquidity in sovereign and private credit markets. For example, the U.S. Federal Reserve and the Bank of England cut their key interest rate to near zero. In addition, the European Central Bank took action, spending €750 billion paying government debt and private securities before the end of 2020. Recently, governments have started to provide a sizable economic support package for the citizens and businesses, including mainly wage subsidies, cash transfers to low-income households, as well as tax cuts and rent reduction for businesses. Also, both the International Monetary Fund and the World Bank announced $50 billion and $14 billion packages, respectively, for financing to help countries suffering from the pandemic. In addition, the U.S. Senate passed a historic $2.2 trillion rescue package, and the United Kingdom pays up to 80% of employee wages for those unable to work due to the pandemic to prevent bankruptcies, massive layoffs, and negative impact on aggregate demand.
Economists predict that a pandemic is underway, downward pressure on inflation due to volatility on supply and demand shock work opposite and asynchronous way. Meanwhile, China's consumer price index (CPI) rose 5.2% due mainly to food inflation. The producer price index (PPI) fell 0.3% in February, mainly due to falling price for raw material. In addition, consumers intend to insert their spending grocery and non-food products for children in the U.S. at March 2020, and they hope to reduce their spending for nearly every other product category 9. Therefore, inflation in other countries is likely to follow that same trend like China, and its impact on consumer price will continue until production starts again. UNCTAD estimates the overall price reduction will be 37% by 2020. According to the United Nations Education, Scientific and the Monitoring of the Cultural Organization UNESCO, and 160 countries have implemented national closure involving more than 91% of the world student population. This brings high economic costs from the time the parents work, more likely to miss work, reduction in lost wage, and adverse effect on production in the short term. In the long run, this situation will lead to setback human research that have a major impact on the economy state development. So many presentation from our group work. More and less, we apologize. Thank you so much. Wassalamualaikum warahmatullahi wabarakatuh.